AI cannot survive without crypto. It can't grow without crypto. So I've said before, the time to be long Bitcoin for the parabolic move, the time for the entrepreneurs to really start pressing the issue is when investors of the world that control the world's money can't invest in growth anymore. And the reason they can't invest in growth is what I said, AI is compressing time and it's making everything binary. Bitcoin doesn't get hurt with that.
It's been a most eventful couple of days for the global economy and markets. Amidst heightening geopolitical tensions worldwide, the fear of World War III breaking out is now at its highest level since June 2025, according to Santiment. Through all the fear and uncertainty, crypto prices have remained relatively steady, with Bitcoin slipping only about 1% over the past 24 hours to trade at $66,772 as of 12:40 AET Monday, while Ethereum fell 2.2% to $1,971. For now, crypto's reaction to the escalating US-Iran tensions seems a bit subdued. However, more volatility lies ahead, particularly with Gulf states issuing a warning that they could retaliate against Iran following strikes on key sites that killed at least 5 civilians. Amid the geopolitical turbulence, crypto analysts and other market participants are holding out hope for a ray of sunshine, namely, catalysts that can help restart the bull market or at least usher in some form of crypto spring. In the actual sense, it's not the absence of good news that the crypto market is battling against at the moment. In the past couple of days alone, we've had 2 big pieces of news that in past cycles would have easily made prices jump. First, Morgan Stanley is making big moves to become a crypto bank. According to a recent tweet from Coin Bureau, the Wall Street giant filed for a national trust bank charter to launch a crypto-focused entity called Morgan Stanley Digital Trust, which would allow Morgan Stanley to custody crypto and expand into digital asset services. Just last week, Meta announced it was integrating third-party stablecoins for payments across its platforms, Facebook, Instagram, and WhatsApp, with a planned rollout in the second half of the year. This could potentially open crypto to at least 3 billion users worldwide, yet the news has hardly had any impact on crypto prices, suggesting the problem with crypto runs much deeper. In today's video, we examine expert analysis from some of the biggest names in the crypto space, Jordi Visser, Matt Hogan, and Raoul Pal, about strong catalysts that could finally give the market some breathing room and help us avoid further unwinding. Later in the video, we also examine Willy Woo's latest bear market analysis as he takes us through when he expects crypto to bottom and the exact price we hit the bottom. If this sounds good, please like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks, and enjoy the video.
I believe coming out of this one, everything that I personally believe Bitcoin would be the asset of the future that every traditional finance person would get into. There needed to be 2 things that happened. One was there needed to be a fundamental argument that grew over time, a narrative, as you say. Traditional finance people love narratives. If they believe there's a reason to get involved with something, it's much easier. The whole crowd of, I don't know what Bitcoin is, I don't want to be involved in it, it was angry. And then gradually over the last 2 years, I've seen people go, give me the story on it. It's happened a couple times this week, because I'm talking about it. And on the webinar this week, I'm like, this is what I'm watching for when Bitcoin's going to go up. And when it does in this one, it will start for the same reason it did over the survive and thrive time. The government will have to do something to stop the asset deflation, okay? But number 2, the narrative has grown, and Ben Horowitz talked about it, Jeff Curry talked about it on Macro Voices, and Imad Mustak talked about it with Raoul Pal. All 3 of them said the same thing. A commodity person, an ex-hedge fund person who bought an AI business, and Ben Horowitz, one of the prominent people in VC, both said, AI cannot survive without crypto. It can't grow without crypto. For everyone in the traditional finance world, go listen to them. Commodity person, VC person. It can't survive. And the reason it can't survive is because the fiat system financial guardrails cannot handle the speed of AI. And when you get to agents, that's the first thing. The second thing, which I say repeatedly, and the reason I'm getting more involved in NFTs, cryptography becomes super important when you can't tell the person calling you is your wife, is your grandmother. And we're at that stage now. When hackings are happening in countries, you have to have this place where this is going on. So I always believe that that would happen at some point, that people will realize that when AI got to this point, you needed this. But there's 2 more components that have evolved in my brain that are now, when I see AI, you try to adapt to the news. Something happened this week with the relationship between artificial intelligence and the government. We've had a lot of episodes. The Venezuela raid, all the stories about how technologically advanced it was.
Discombobulator.
AI is going to allow you to come up with lots of discombobulators of all forms. It's a nuclear weapon. It allows you to go in and do what that situation did. At the same time, Anthropic is in a fight with the Defense Department. Anthropic says we're taking off our safety measures. Because
well, hold on, but let's break it down for a second. So what you're arguing is AI is this like nuclear weapon because it is going to give us superhuman intelligence that can be applied from a national defense, a security, et cetera standpoint. Separate to that, Anthropic said, hey, we are going to take off these safety measures because of the speed of development that they need to keep up with their competitors. But now these two things are coming to a head because the Department of War called called Dario into the principal's office and said, hey, you can't tell us what we can use the technology for. He then jumped the gun and did the old, well, I'm just going to make it all public. Mm-hmm. And then I saw Emil Michael call him a liar publicly. It's getting nasty out there.
The relationship between the government and AI has been getting closer and closer during this, and now it's starting to come to a head. And the reason I bring it up is I've always believed that AI would get to the point that the government would have to have a huge influence on it, like a regulated utility. And it's not a coincidence that AI is considered electricity. So if that happens, what's the valuation of the hyperscalers?
Well,
compression.
What do you think happens with the government?
I think the tools are getting so powerful, and at the end of this year, they're going to be even more powerful that the government can't allow. They're going to need to be involved to a much greater degree on the decision-making where the focus is. What happened in Mexico, again, the K-shaped economy, you have 8 billion people on the planet that compared to people in St. Bart's and yachts, there's a big difference. And now all of them have a nuclear weapon in their possession, and there's no way to stop it. It can be in any country on the planet. So when you see the situation in Mexico, this is what makes the quantum argument towards crypto so ridiculous. Agent swarms, which I talked about, are now real. So you're going to see more hacks. And at the same time that all this is going on, software is already being disrupted and re-rating. So I've said before, the time to be long Bitcoin for the parabolic move, the time for the entrepreneurs to really start pressing the issue is when investors of the world that control the world's money can't invest in growth anymore. And the reason they can't invest in growth is what I said, AI is compressing time and it's making everything binary. Bitcoin doesn't get hurt with that. It doesn't get hurt with agent swarms. It's built on cryptography, like all of the things that were the benefits of it, the scarcity. That's what'll happen. So I believe, back to the point, the mind-blowing part of this will be the rotation that is forced to happen as we come out of the inevitable. Central bank, government, whatever, has to help the market if assets fall. If I'm wrong, it's because the assets just go to all-time highs again, or we just kind of go sideways here all year in the S&P 500 while the rest of the world does fine and where SanDisk goes straight up and Micron goes straight up. Markets don't move like that to me. They actually start to follow, and I believe the software stocks are saying a more important story than the memory shortage on this for the time being, and I think people need to survive to be able to thrive.
It's been established that one of the main causes of crypto's lower than expected performance, particularly in the second half of 2025, which should have been the euphoric peak of the bull market, is that a large percentage of the little liquidity left in the system is being pumped into the AI race. However, Visser has been arguing for the past couple of months that AI's disruption of Bitcoin and crypto will be temporary, and that AI will flip from a headwind to a tailwind for crypto. And according to a recent statement from Coinbase CEO Brian Armstrong, the shift from negative to positive may come sooner than expected.
The thing that's more unique to crypto is that these AI agents are increasingly needing to do payments to get work done, and we're giving them all stablecoin wallets. So you can imagine, like, in the traditional financial world, like you and I can go get a credit card or something where we have to be identified as a human. But if you're an agent trying to get work done, you either have to bug your human every time to like, will you approve this purchase? Or if you want to, increasingly these agents, you can tell them, go do this like overnight or the next the next hours, week, whatever, and get work done. Like they might need to spin up AWS resources or get through a paywall on the internet to read some research paper, buy a domain name or whatever, spin up a marketing program. Like if you really want to treat them like almost like their own digital employees, they need to have like a corporate card kind of thing. And traditional corporate cards can't be issued to non-human entities. And so we're giving them stablecoin wallets. They're doing a lot of machine-to-machine payments. This is all very new in the last few months, but it's been getting a lot of traction. So that's pretty exciting. We built a couple of tools that allow any agent to get a stablecoin wallet inside it.
In a recent post, Real Vision CEO Raoul Pal also discusses how much of the world is about to get disrupted by AI agents, which means even more tailwinds pushing crypto prices upwards. His tweet reads, "I always assumed the total adjustable market of ubiquitous technology, such as the internet, crypto, or AI, was the population of the world. It isn't. AI agents will 2 times the users of all of these in 5 years. Agents are more disruptive of the total addressable market than they are of business." Raoul Pal's tweet reframes total addressable market, TAM, in a way most investors, and especially crypto investors, have not yet fully priced in. Traditionally, TAM assumes humans are the users of technology. The number of internet users, smartphone owners, or financial participants sets the ceiling for growth. Pal argues that this assumption breaks down once AI agents become autonomous economic actors. If AI systems begin transacting, negotiating, trading, consuming data, and interacting with digital services independently, then the number of users of technology no longer equals the global population. It multiplies beyond it. In that world, AI agents effectively double or even exponentially expand demand because machines operate continuously at machine speed, generating far more transactions and economic activity than humans ever could. For markets and crypto investors, the disruption is profound because crypto networks are uniquely positioned as machine-native financial infrastructure. Blockchains settle value programmatically without human permission, meaning AI agents can directly use crypto rails for payments, computation, identity, and coordination. If billions of AI agents begin interacting economically, networks that charge per transaction, per computation, or per settlement could see demand expand by orders of magnitude, redefining valuation models for tokens, protocols, and digital assets. In simple terms, Pal's thesis implies crypto's upside may not come from onboarding the last billion humans, but from onboarding non-human economic participants, turning crypto from a speculative asset class into the settlement layer of an AI-driven economy. This leads us to the final part of our video, the latest analysis from Willy Woo about the bear market and why he believes Bitcoin will find a bottom in 2026. The tweet reads, "This bearish sell-down by investors seems to have exhausted, which gives price a reprieve to consolidate sideways for maybe a month, even a rebound to mid-70s, which would likely to be rejected. This is because the broader regime is heavily bearish with both spot and futures liquidity deteriorating. I've never seen Bitcoin rally when both sources of liquidity are bearish. If I was to make an educated guess, I'd say Q4 would be good timing for the end of the bearish trend and Q1 or Q2 2027 for bullish momentum to return. $45,000 would be a typical bear market bottom. Bitcoin has only ever existed in a secular global macro bull market 2009 to 2026. If global macro breaks down, then $30,000 is the fallback level of support, $16,000 as the final line to maintain Bitcoin's bull trend. According to Wu, the aggressive selling that pushed Bitcoin lower appears to be largely exhausted. That matters because markets don't reverse when buyers suddenly appear. They reverse when sellers finally run out. In his view, Bitcoin is now entering a period of temporary relief where price can stabilize, consolidate sideways, and possibly rebound toward the mid-$70,000 range. But importantly, he warns that any rebound in the near term is likely to be rejected. Wu's price levels help frame how severe this reset could become. Around $45,000 represents what he considers a typical bear market bottom, a correction consistent with previous Bitcoin cycles that would still preserve the long-term bullish structure. A move toward $30,000 would signal something deeper, not just crypto weakness, but broader macroeconomic stress affecting all risk assets. And the final level he mentions, near $16,000, isn't presented as a prediction so much as a boundary. That level represents the line where Bitcoin's long-term secular bull trend, the exponential growth pattern it has maintained since inception, would face its most serious test. Are we simply living through another classic crypto winter, or are we watching the market quietly prepare for a cycle unlike anything Bitcoin has experienced before? And if liquidity really is the missing ingredient today, what happens when global capital flows turn positive again? Let me know what you think in the comments. Do you agree more with Wu's cautious timeline or Pal's exponential future thesis? Don't forget to like the video, subscribe for more deep macro and crypto analysis, and I'll see you in the next one.